Hello traders, Gary Wagner here. Just after 12:30 in Honolulu, 6:30 in New York on Tuesday, 13th day of July 2021, and this is the daily report for gold and silver. We had dollar strength really taking away from any strong upside move in gold as it reacted to CPI data that came out today indicating a large uptick in inflationary pressures, really the largest since 2008. We'll talk about that during the show, which begins now. Gold traded fractionally higher today, up $1.80 at $1,807.70. However, it did trade to a high of $1,818 before falling back to a fractional gain on the day. And what is most interesting is this comes when new consumer price index data was released, showing a major uptick in inflationary pressures last month. It was obviously dollar strength that provided very, very strong headwinds for both gold and silver. Gold's marginal gains when compared to the headwinds of about 0.6%, a 53-point rise, taking the dollar index to 92.79. This first chart that we are looking at is a daily candlestick chart of the dollar index. You can see that the year starts here, which is roughly the low that we had in the dollar index this year. We've marked two different highs. This one occurred in March 9th and this at the end of March, and that's the highest trading point that the dollar index has been throughout this year. Today's move was substantial. It is this large green candle. It clearly moved above that first top, and you can see that that top acted as a resistance area about the third week of June. We had some highs that came in above it, actually had one close above that, but today was a clear close above that, which means that if it continues, it's 93.50 that will really be the next mark that the dollar index could hit. Dollar strength is very, very clear when we look at it through the eyes of an area chart. This, of course, marks the beginning of June right here. So through June and July, we have seen really a tremendous gain from these lows coming in at around 89.50. That would be these lows here, to current pricing at 92.79. That is clearly a move of approximately 3%. The reason we spent so much time with the dollar just now is it has had such a profound impact on gold pricing. Considering that gold hit a high today of about 18.18, and that matches the high that came in just about 3 or 4 trading days ago. Just like on that day, it was unable to sustain gains, although it closed a little bit higher than the open. Again, it's a very, very small-bodied candle. We still see support at around 1800 to 1790. That is based upon the 100-day moving average. And we still are looking at this cross that came in, a golden cross. We see the market moving up, but we also see it consolidating and just kind of trading sideways over this last week. It is for that reason that we will maintain a neutral stance with no active trades in gold. Silver futures actually incurred a pretty strong decline, down about 18 cents, 26.06. This, of course, bases the most active September silver futures contract. Silver did get hit hard. It is still trading within a defined range. That range can be eloquently seen as between the 200 and 100-day moving averages. That's this white box that I just put in here. The small candle that you see forming right here below the close of the market in New York is the market trading in Australia. We're currently at 26.07. But the key is that we are holding a line in the sand if, in fact, we can see silver close above effectively 26.20. Right now, it appears as though it is moving to the bottom of the range. It is for that reason that I am not extremely bullish on silver. And in terms of upside potential, we will have to see a fundamental event moving that market higher. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.